Canadian Real Estate Homefront Podcast.
Like, there's land everywhere in Canada. Fixed variable rate is essentially a fixed payment. So
If your property ain't selling, you got to look at the price. Hey everyone, welcome back to the Canadian Real Estate Homefront Podcast. Just a quick one for you guys today. Obviously, the inflation report just came out today. CPI rose to 4% year over year as surging oil prices pushed energy costs higher. So the increase was above the expectation of 3.8%. Remember, the Bank of Canada wants to see that 2% inflation, and they will do so at all costs. So basically, energy went up, gas prices went up, and that really pushed the CPI to 4%, which is definitely not good for rates. It's not good for the economy. We're still seeing that really sticky inflation, which is definitely not what we want to see. One silver lining was that grocery price growth slowed further. That's good. Grocery prices were still up 6.9% year over year, but that was smaller than the 8.5% that we did see. The bond market also responded with a jump. Bond traders are pricing in another rate hike. So the bond was closed at over 4%. So that's something to take note of, that the bond traders are saying, hey, yeah, we think another rate hike is coming from Tiff Macklin. I did read the report by RBC. They don't think another rate hike is in the agenda this year, but a lot of people are pricing in another rate hike, and we're probably going to see another one, in my opinion. Rent prices also accelerated in 8 provinces. I think that's pretty obvious that rent prices are going to accelerate. We have really high rates, which always pushes up rent prices because people don't have access to cheap money. And you have over 1 million people coming to the country. And usually when people come to the country of Canada first, or they immigrate here, they're going to rent first. So you have this pressure in 8 provinces of higher rent prices, which really puts a damper on a lot of people's wallets. So this was just a quick video, to be honest, not a ton to really dive into. Just CPI is up. I think anyone thinking after the last rate pause that the real estate market was going to rip, I don't think that's going to happen. I think that we're going to see higher rates for longer, well into 2024. We're probably going to see another rate hike before we see another rate cut, in my opinion. So anyone telling you to jump in and that, multiple offers are coming back, I think that's a pipe dream at this point. I think that the rates are going to continue to rise even on the fixed rate, as that's connected to the bond yield. So we'll see a premium on that. We'll probably see that rise as well. But yeah, not great news for Canada today, unfortunately. I wish it was better, but maybe I guess the federal government could kind of do a bit of a better job to kind of help the Bank of Canada achieve its goal of getting to that 2% target almost. In my opinion, it's to slow the process of international students and immigration until we get a hold on our infrastructure, as well as maybe axe some of the carbon taxes that we're seeing and the heavy tax that we see on our gasoline prices, because, unfortunately, oil really translates into a lot of different goods, right? You have to ship food across the country. And when those prices rise and when you heavily tax the oil that we use for our gasoline, it translates into other areas of the economy. And ultimately, we see this higher inflation. So let's see what happens. We will definitely keep you guys posted on any more breaking news, but this is kind of the headline for today. It's not good. You'll see rates go up most likely. We'll see the Bank of Canada probably do another 25 basis point raise at the next meeting, I believe. But there are some good things. GDP did slow last quarter. The unemployment rate is going up, and I know those don't seem like good metrics, but they're good in terms of inflation. It's kind of what the Bank of Canada wants to see. So we will definitely keep you guys posted. We thank you so much for tuning in, and we'll talk to you soon, and take good care.